Hey Stock Twits, Zor Trades here. May 12th, 10:30 at night. I'm looking at a chart, the S&P 500 here, and the reason why today, as I'm in my office, and I'm looking at this market rip higher, I'm in total shock and awe. I can't believe what's going on. And then as I'm driving home, I'm saying to myself, how and why did I miss this 10% rip that we just had in the last 4 days? And my answer was that I did the obvious. And the obvious was when you have a market that loses 11% in 2 days, the obvious thing to do is to be cautious. Take your stops, sell some of your longs, and let the dust settle. But the obvious trade was the wrong trade. I mean, look, if we went up roughly 3%, no big deal, 4%, whatever, 9.9% in my business, jeez, 4 days? I've been whipping myself the entire day today. I can't believe this. I'm frustrated. But the fact of the matter is, look, the obvious hasn't been working. And right now, you look at the S&P 500 up 3 days in a row, right below the 50-day moving average, right below the scene of the crime. The obvious trade here is to be cautious and possibly fade it. As a matter of fact, today, Zor Trades faded the S&P in the market by going long some TZA at $5.85. And the reason why, in my book, when I was brought into the business, they told me maybe you should short into resistance. You take a stock that's down big, it's for the last couple of days, and then it has a weak bounce on lower volume. And that's exactly what we're seeing right here in the spiders. You see two big down volume candles. I mean, unbelievable volume. And then on the way up, you see three lower volume days. Lower volume, lower volume, lower volume. The SPY is right back to the scene of the crime, right below the 50-day moving average. The obvious trade here is to go, fade it, be cautious. But, over the last year or so, this market has taught us to go against the obvious. Every dip has been bought. Every bad news has been bought. That's the bottom line here. So I would not be surprised if the S&P 500 here rips higher. And the reason why, if it does, that will hurt the most amount of people. That's it. And also, I'm looking at GLD. Here's the GLD. It looks fantastic. Hit another high today, a nice volume. I mean, this thing is up, number one, because of a technical breakout. Number two, then you had the grease fears. But guess what? We gave them $1 trillion. So whether we believe that that's going to work or not, it doesn't matter. That fear is out of the way somewhat. Also, there was a fear with the market down 10%. Guess what? We just gained 10% in 4 days. That fear is no longer here. They're printing money. Okay, that's the obvious trade. And here with the gold, whatever it is, 121.40, you got, whatever you call this, a doji, an island, whatever it is. I think gold here in the short term is overdone. I think the obvious trade is to continue to go long gold because they're printing money like there's no tomorrow. But here at these levels, I want to fade that move by either shorting GLD, shorting the DGP, or going long like the GLL or something with a stop at today's highs. So either way, we want to go against the obvious. Trading the obvious hasn't worked. Am I going to put money behind that, not so obvious, go against the obvious trade in the S&P 500? Probably not. Am I going to put money behind this, not so obvious, go against the obvious GLD trade? Maybe. If I do, I'll let you guys know. It's been a very tough market. I just want to let you guys know what I'm thinking, my thoughts. I might do a Chinese, go against the obvious video because I'm seeing some, some decent setups there. But either way, Zor Trades signing out. If I make a move on this GLD tomorrow, I'll let you guys know. But it's a very frustrating market. My playbook has been thrown out the window. There's a new one out there that's being played. Maybe the old one might come back, but for now, you got to go against the obvious.